Welcome to module number 3, guys. So in this module we're looking at the candlesticks and the chart patterns. So I want you to go and practice whatever that I'm teaching you here, so that it will be easy for you to understand this trading strategy. It will be easy for you to start making money from this market. So imagine when you open your trading view and you see something beautiful like this. So you see something beautiful like this. So this is what we call the candlesticks. This is what we call the candlestick. These are what we call the candlestick. So what the candlestick does, they help us to understand if the market is bullish, that is, if the market is in an uptrend, or if the market is going up, or if the market is bearish, that is, if the market is in a downtrend like this. So what these beautiful babies does is they help us to understand a story. They tell a story in the market. So by understanding their anatomy, we are able to predict the next movement. So this is what we call a candlestick. So this, let me say, from this point, right, to this point, this is what we call the board. So what happens is the market opens here, okay, then in an uptrend, let's say in case of an uptrend, the market opens here, and then the sellers try to push the market to this point. However, the buyers come in so strong that they push the market all the way to this point. Then the sellers try to push the market back again to this level. So in a buying scenario, the market opens here and then it closes here. And then in a selling scenario, the opposite is true. The market opens here and it closes here, since the market will be in a downtrend. I hope this is easy, guys. So this is what we call the board. So this is what we call the body. Okay, so this is what we call the body. So in a candlestick, this is what we call a body. And what the body tells us is the body. It tells us about the buying pressure in case of an uptrend. So in case of an uptrend, the body is telling us about a buying pressure. So meaning the bigger the body, we now know that it is saying buyers are now in control. So in case of a downtrend, the bigger the body, it means the sellers are in control, and the vice versa is true. A smaller body means less buying pressure. Smaller body means less selling pressure. I hope it's easy, guys. And then these beautiful lines here that you see here are what we call wicks. These beautiful lines here are what we call wicks. Okay, so what wicks represent is the wicks, they represent what we call rejection. So wicks, they represent what we call rejection. So meaning the bigger the wicks, it means the bigger the rejection. So the smaller the wicks, then the smaller the rejection. So I will explain more as the course progresses, but this is what I'm talking about when I'm talking about the wicks. So let's take, for instance, this movement right here. Okay, we see a strong buying pressure. We see a strong buying pressure, and then we approach a certain line, and then from this line we see a big rejection, and then the price starts to drop down. So what actually happens here is the price opened here. Okay, the price opened here. The sellers tried to push the price, but they couldn't, and then buyers came in so strong and they pushed the price up to this level. Okay, the buyers pushed the price up to this level. However, sellers were so strong compared to buyers that they managed to push the price back to this point again. So we are saying it's a rejection because the buyers tried by all means to push the price to the upside, and then they were rejected by the sellers, where the price it was pushed back to this level right here. This is where the price closed. Okay, so this is why we are saying it's a rejection. So when you see a bigger wick in an important level, such as the support and resistance or the demand zone, you have to pay close attention, because the market is now telling you something. Remember what I said about the candlesticks, that they tell us a story. So when we look at them, we have to read what the market is trying to tell us. Okay, so let's look at the chart patterns. Let's look at the chart patterns. Okay, so we look at the reversal patterns, the ascending and the descending channel, the ascending and the descending flag, the double top and the double bottom. So these are reversal patterns. So these are reversal patterns. Okay, so let's look at the ascending channel. Okay, ascending channel, the market is in an uptrend like this, is giving us those high highs and high lows. It's giving us those high highs and high lows. So what you do, you just mark you mark a trend line and create a channel. Okay, you mark a trend line and create a channel. So what we wait for the market to break outside this this trend line, and then take this higher low right here. Okay, so what this means is this is a change of character. It is telling us that now the market is taking a new direction. So for instance, here we were in an uptrend. So if the market breaks outside the channel, it is now giving us an indication that possibly it is now taking the downtrend, something like that. So this is what we call the ascending channel. Then the descending channel is just the opposite of the ascending channel. The market is giving us those lower highs and lower lows. Okay, those lower highs and lower lows. So what you do, you just use your trend line and create a channel, and then we wait for the price to break outside this channel, probably take this lower high, and then what this does is it tells us that we have now changed character. The market has now changed character. So meaning, if this was a downtrend, now the market is changing to an uptrend. I hope this is easy, guys. So this is what we have on ascending channel and descending channel. So the flag is almost similar to the ascending flag. The ascending flag is almost similar to the ascending channel. Okay, so the market is giving us so this is what we call an ascending flag, something like this. Okay, and then you mark your flag like this. So the market is giving us those higher highs and higher lows, and then you mark them. So what we wait for here, we wait for the market to break this trend line right here, and then take this lower high as well. So from this point, we know the market has changed character. Possibly it's now taking a new direction. Okay, so similarly, the descending flag is like that. The market is giving us those lower highs and lower lows, but creating a flag sort of. So what you do, you just mark the flag, okay, and wait for the market to break this channel. So if it breaks this channel, it is now telling us a story that it is taking a new direction. So simple like that, guys. This is the ascending flag and the descending flag. So another reversal pattern that we will look at is the double top and the double bottom. What happens with the double top is the market is in an uptrend, and then it meets a strong level. So in our case, it meets the what we call it, the supply zone. Okay, then it is rejected to the downside. Then it comes back again to the same level, and it is rejected again to the downside. So these points here are what we call the double top. Okay, so these are reversal patterns. So the double bottom is just opposite of the double bottom is the opposite of the double top. Yes, the double bottom is the opposite of the double top. So the market is in a downtrend like this, then it meets a demand zone. Okay, it is rejected to the upside, then it comes back again, it is rejected to the upside. So what it means is now the market is changing direction. So if it was selling, and then it is rejected like this, creating the double bottom, we now know that possibly we are taking a new direction. So these are the chart patterns that we look at. So I want you to go and practice these chart patterns. I want you to train your eyes to see these chart patterns. Then you will notice that the trading strategy that I'm trying to teach you, it will become easy. Okay, thank you so much, guys. So this is module number 3. Don't forget to subscribe to this YouTube channel. Don't forget to like. Don't forget to share the video even with your friends. It's Forex signing out.